What's up everybody, Michael Silva here to do some technical analysis on the S&P 500. We are going to be looking at the SPX, which is the S&P 500 index. We're going to look at three different time frames today. We're going to look at the weekly time frame because today is Friday and the market is closing for the weekend. Then we're going to look at the daily time frame and the 30-minute time frame. We're going to map out support and resistance levels. Let's get into it. All right, welcome back. We are here looking at the weekly time frame. Now keep in mind the time right now is 12:48 Pacific Standard Time, so we still have about 12 minutes left until the market closes. What I'd like to point out here on the weekly time frame is just two key levels here. So as you can see, this week looks like it's closing off with an inverted hammer candle, which is also known as a shooting star. And the candle previous to that, the week previously, was a hammer candle. So both are kind of in a way contradicting one another, means that the market is undecided as to where it really wants to go. If we had a 2-week time frame, this candle would look like an indecision candle. So that's kind of what we're going to be calling it right now, a couple of weeks of indecision. So as far as the weekly time frame goes, these are the levels to keep an eye on. I'm going to go 3280, you can call it 3281, and then also 3127. So really a break above this, we're definitely going to be closing the gap that we've been talking about over here and then heading to a market high. If we get a break below this green line right here, the 3127, I don't see why we couldn't go try to retest that 3000 level, maybe just a little bit above that, 3080. But we will have to wait and see where the next week plays out, or if we're just going to kind of get hung up in this specific channel and move sideways a little bit longer while earnings seasons comes to a close. Let's hop into the daily time frame. All right, we are here on the daily time frame. If you are new here, this red rectangle up here is the bear's camp. That is a zone of resistance that we mapped out quite some time ago. And then this green rectangle is the bull's camp. That's an area, a zone of support. We call that the bull's camp. These purple trend lines right here is a rising wedge pattern that we mapped out quite some time ago. And now it looks like the price is starting to break down beneath that rising wedge. So we got to see here if it is going to hold true to its nature, to its pattern, and breaks below. Now I said, how far can the break be? Well, I kind of personally think that a rule of thumb here, you can see the break be as kind of big as the base. So if that does hold true, we'll probably see a come down right here to 3130, 3150, that kind of range right there. But we really need to see a close below 3200, and I'll get more into that as to why on the 30-minute time frame. Let's zoom in really close to today's price action. So today we had the gap down, the price moved lower to that 3200, did not crack below it. We still have 8 minutes into the trading day. However, this candle does look like it's holding up. So once we get into the 30-minute time frame, we'll map out that 3200 as a main level of support. But if we do see some continuation to the downside, the next kind of stop point on this daily time frame will be that 3150 level that we need to keep an eye on the daily time frame. Overall, this market has been trading within this type of channel right here. Let me map it out. 3250 all the way down to about 3000. It's been caught up there for quite some time. And as you see, we had this somewhat of a false breakout right here with this day. And then the next day, it did show some really bullish momentum. But then the next day after that, the resistance of 3278 held up and we saw that crash and pull back below. So are we going to just see a little bit of a pullback to that 3200? And is that going to be that buy the dip? I did happen to place a little trade here at 3200 for a quick option scalp. I'll go ahead and post that right here so you can just see. Nothing too crazy. I only did one contract, quick scalp of 25 bucks. And now my question is whether we're going to see a break below that 3200 or if we're going to continue to move up to the upside. Time will tell. Let's hop into the 30-minute time frame. All right, so we are here on the 30-minute time frame. This blue vertical line going down my screen here represents where the day started. I'm going to go ahead and remove that for now. And as you can see, yesterday we plotted this out as kind of a bear flag taking place. We saw some lower highs, but yet we had some pretty big upper or lower wicks taking place. So we thought, hey, maybe that's building out some sort of a base for a move to the upside. Today, the market gapped down right here on this candle and started moving lower to about 3202. So not quite 3200, but just about there. I would say that's within the range of calling it 3200. So that's what we were kind of predicting as far as on yesterday's video. If we saw a move below this, we would see it come down to that 3200 level. And ultimately, it formed somewhat of a hammer candle and moved up, but then came right back down. And then look where it touched today. It literally touched right down on 3200. This is where I placed the trade just a little bit above it. and caught a little bit of a profits moving up here, but it wasn't that large of a trade. Like I said, just one contract. Nice little scalp there. And then the price is struggling to get back above this area of resistance and kind of moving around this area. So the market is closing in 4 minutes. It looks like it's going to close within this little tight channel right here. Let's go ahead and map out some support and resistances so we know what to look for on Monday. So as far as resistance goes, I'm going to go ahead and place a line right here at 32.27, and the reason why is that's kind of the bottom of the bear flag. Now we have 2 candles right here that hit that 32.27 just perfectly, and as you can notice, when we had the gap down and it moved back up, this area really did hold as resistance. So it held as support here. Once support is broken, it then becomes resistance, and you can see that it held right there. So 32.27 is going to be an area of resistance you want to keep an eye on going into the next week. Then obviously we have the bears camp here at 32.35, but I'm not going to like draw that in. You can keep that in the back of your head and just know that that's an area of resistance. But to keep the chart clean, I just want one support and one resistance area. The next area we're going to look at is an area of support, and that is going to be right here at 3,200. Nothing's changed there. We've been saying 3,200 for quite some time now. So boom, right there at 3,200. The price, you got to just watch to see if we see a break above it and it moves higher, or a break below it, which will move a little bit lower. Now keep in mind the areas of support and resistance that we mapped out on the daily and the weekly time frame, so that can help you make better decisions when trading throughout the week. That is all I have for you on today's S&P 500 Technical Analysis Update. See you later.